What's up guys, back again with another video, and today we're going to take a look at 5 ETFs for you to get in 2020 that's going to provide you total market domination. So get ready for some free game. We're about to get it. Alright guys, so also real quickly I wanted to show you this pie chart which represents all the holdings inside my portfolio. As you can see, 31.4% of my holdings is in Amazon, and the reason for that is I actually got Amazon back in 2017 when it was really cheap. I picked it up for roughly like about $800 a share. So I'm holding on to that because right now the stock is up to $1,800. The rest of my portfolio, which roughly is, I would say, about 65 to 70%, is all in dividend-paying stocks. All right, so welcome back, frugal people. This is my Robinhood portfolio. Currently, I am at 33K, and for the week, I am up $236.12. All right, so we're going to jump right into the first ETF. And the first ETF we're going to take a look at, the ticker is NOBL. So let's go ahead and bring that up here in Robinhood. And this is the ProShares S&P 500 Dividend Aristocrats ETF. The current price is $74.68. And over the last 5 years, this ETF has performed very well, returning pretty much 48.88% on equity. If we scroll down here, you could see that as far as being invested, I have $224.04 of total equity. My cost on this is $221.93, and total return so far, I am up 0.95%. or $2.11. This ETF represents 0.68% of my portfolio with a whopping 3 shares, and my average cost is $73.98. Now, why would you want to go ahead and purchase the NOBL ETF? For the simple reason that this ETF tracks the S&P 500. So it seeks to mimic the S&P 500, but a particular sector of the S&P 500, which is the dividend aristocrats. What is a dividend aristocrat? A dividend aristocrat is a company that has successfully increased their dividends every year for 25 years straight. So there's a bunch of companies in the S&P 500, but there's only 57 that has successfully increased their dividend for the last 25 years in a row, and this ETF covers those companies, which would stand to reason that investing in this would be good because these companies have successfully made a profit for 25 years in a row. Remember, dividends are a part of the profits that the company makes that's divided amongst shareholders. If these companies have been profitable to the point where they're able to share dividends for 25 years in a row, that's a good indication that they're stable. But let's just go ahead and take a deeper look at this ETF. As we can see right now on Robinhood, in terms of popularity, it is owned by 3,732 people on Robinhood. Let's go ahead and scroll down and see if we could get some more information here. So it says here, the Noble ETF tracks an equal weighted index of S&P 500 constituents that have increased dividend payments annually for at least 25 years. The market cap is $6.23 billion. The high today is $74.98, and the 52-week high is $75. So currently the price is below the 52-week high, and you guys know that's usually one of my requirements before I purchase. Price earning ratio is 21.65. The low is 74.56. and the 52-week low is 56.79. So it is trading a little bit higher now than the 52-week low. The dividend yield is 2.41, and roughly this equates to about currently 58 cents per share paid quarterly. Now what I want to do is go ahead and hop on over to the website for ProShares. So let's go ahead and pull that up here so we could get some basic information. All right, and this just gives you the information here on the ProShares ETF, NOBL, and it's the Dividend Aristocrats. But what I wanted to do is go ahead and go down here and you click on the Noble ETF, and then you click the fact sheet. And once you click on that, it's going to take you over to the PDF. And what we're going to do is just scroll down here so we could get some basic information. So here it gives you the returns year to date, over the last 3 years, 5 years, and since fund inception. You also have the line charts here, which is comparing it to the S&P 500. And then we have the overall Morningstar rating here for the stock. If we scroll down some more, it will give you information on the top holdings in the company. Now, like I said, this ETF covers the Dividend Aristocrats, and currently there are 57 companies which qualify as Dividend Aristocrats. These are the top 10 companies, and the number one is Target with 2.07%, and then we have AT&T, then we have Brown and Foreman, then we have Cisco, then we have AbbVie, we have Procter & Gamble, we have Sherwin-Williams, Consolidated Edison or Con Edison, and then we have Cincinnati Financial and Hormel Foods. So those are the top 10. And the top 10 represents 19.35% of the total holdings. Now, if we go by sector and we scroll down here, it shows here the largest sector is consumer staples, which is 23.5%. And consumer staples just, it sounds exactly just like that. Those are the basic needs of human beings. So consumer staples. Then we have industrials with 22.10%. And we have financials such as banking, investment firms, that type of stuff, with 11.93%. Then we have consumer discretionary. And this is the stuff that the consumers don't necessarily need. So it would be things like, companies like Nike, clothes, that type of stuff, consumer discretionary. Then we have the health sector. As we saw, there's AbbVie in there with 10.66%. Then we have materials, and we have energy, and we have communication services. So we saw AT&T was in the list. And then we have utilities, Con Edison, and we have real estate, and we also have information technology. So it's, it's pretty much spread out over a bunch of sectors, pretty much all the major sectors. Now, if we go down here, I wanted to show you guys a list also of companies that have actually exceeded the 25-year mark. So these are some companies here that have actually increased the dividends for actually more than 25 years. So the first one we have is 3M with 56 years and an annualized return of 14.55%. Then we have Coca-Cola also with 56. We have Colgate, Palmolive, 56, Dover, 56, Emerson Electric, Genuine Parts, Johnson & Johnson, Procter & Gamble, Stanley Black & Decker, and Hormel Foods. So these companies are all companies that have, and this is since September 2019, they've all increased their dividends for more than, pretty much 50 years on this list. So this ETF is, for me, like I said, it is a buy. Currently, I own roughly 3 shares, and I fully intend to scale up and get more. The price is a little bit high right now, but I am using the principles of dollar cost averaging, so I'm just continuously buying and buying and buying every time I get some extra cash. So that's it for the first ETF. We're going to jump right in now to the second one. All right, so the next ETF we're going to take a look at is USRT. So let's go ahead and pull that up here in Robinhood. And this is the iShares Core US REIT ETF. So if you guys don't know what a REIT is a real estate investment trust. Usually they are invested in specialized areas of real estate. This ETF covers only REITs, and it covers REITs in multiple different segments. It has currently 158 different REITs inside this ETF. Over the last 5 years, performance-wise in Robinhood, it is up 17.82%. This REIT is actually owned by 318 people in Robinhood. If we scroll down here and we take a look at my investment in this REIT, I currently have total equity of $110.96. My cost on that is $110.12, so I'm up 84 cents or 0.67%. The average cost is $56.06 for me, and I currently own 2 shares. If you scroll down here to get some more information, it says here that the market cap is $1.47 billion. The 52-week high is $56.88, and the 52-week low is $42.78. The dividend yield is 3.71%, which is something that you guys know that I like. Anything over 3% for me is usually pretty good. And we're going to go ahead now and hop on over to the website for this so we could take a look. All right, so iShares is owned and operated by BlackRock, and you guys know I like BlackRock and I like iShares for the simple fact that they usually have some of the lowest fees. BlackRock is also the largest asset management company in the world with roughly $6 trillion under management. All right, so let's go ahead and hop on over to the actual ETF, and it says here USRT iShares Core US REIT ETF. All right, so if we go ahead and we scroll down here, it's going to give you some basic performance information. Here we have a little chart which shows how a hypothetical growth of 10,000 or the inception of this ETF, and it just shows here it's just going up and up, so that's good. Then we have the breakdown here in terms of 1 year, 3 years, 5 years, 10 years, and since inception. We scroll on down some more, and then we have the fees. The fees on this ETF is 0.08%, which is pretty decent. It's low when you compare it to, say, a comparable REIT in this sector, which is the VNQ by Vanguard, whose fees are 11%. So we scroll down here and we get to the holdings. This is just the top 10. You have the top 10 here, and it just gives you all the different REITs that are listed in the top 10. And a lot of these REITs I own, some I don't. So owning the ETF, it's going to give me that exposure. But we have popular REITs like SPG or Simon Properties, which owns malls. We have Welltower. We have Digital Realty. We have Reality Income, which is a monthly dividend paying one. Then we have Ventus, and it goes on and on. In total here, if we click on all, it has 158 companies listed inside this ETF. So for me, this ETF is a buy. Like I said, when you compare it to the VNQ by Vanguard, which is, it's actually a much larger ETF in terms of holding. That one has 184 different companies, but it does have a larger fee. That one also, the price is roughly about $97, whereas the price for this one is $55.46. So this one has a lower bar to entry, and it has a lower fee, and it is managed by, like I said, the largest investment firm in the world, which is BlackRock. So for me, this is a go. All right, so next up we have the ETF ITA, which is the iShares Dow Jones US Aerospace and Defense ETF. Currently, the price is $231.54. For the last 5 years, it is actually up 103%. So it has had some amazing growth over the last 5 years. Now, pretty much what this ETF does, it covers 38 different companies that are in the defense sector. So it's under industrials, but it's primarily aerospace and defense. You have huge companies like Boeing in there, United Technologies, and a host of other different companies. Currently, 1,504 people own this ETF on Robinhood. And if we scroll down here to look at my current investment, currently my equity is $694.62. My cost on that is $668.87. My total return so far is 3.85%, or I am up $25.75. I own 3 shares. My average cost is $222.96, and it represents 2.09% of my portfolio. If we scroll down here, it just gives you some basic information. It says the ITA tracks a market cap weighted index of U.S. manufacturers, assemblers, and distributors of airplane and defense equipment. The market cap for this is 5.73 billion. The 52-week high is 234.55, and the 52-week low is 160.29. The dividend yield is 1.43%. And today's open price is $230.80. All right, so let's go ahead and hop on over to the website for this ETF. And this is going to be another iShares ETF, which is owned and operated by BlackRock. If we scroll down here, right away it shows us that the fee is 0.42%. So it is a little high. And especially when you compare it to the other ETF, which pretty much seeks to cover the same aerospace and defense sector, which is the XAR ETF. And don't worry about the different ETFs that I'm reading off in the video, guys. I will go ahead and leave a link in the description to my blog post where I go ahead and list all the ETFs. I list all the tickers. I list the current price, the fees, as well as the dividend yield and the actual dividend price per share. So that will be in the description, and it will link directly to my blog. All right, so let's scroll down here and we look at performance. It says here for hypothetical growth, if you invested $10,000 pretty much since inception, you see where it's going here. It's touching roughly up to the, looks like the 50K line. All right, then it gives you the breakdown in terms of the return over a year, the last 3 years, 5, 10, and then since inception. We scroll down some more so we can look at the actual holdings. And you can see here the top 10 holdings. We have Boeing, and we have United Technologies, Lockheed Martin, and these are all huge companies. These are all huge companies. If you look at these companies and the shares individually, they're not cheap companies. Overall, for all the holdings, let's go ahead and pull that up here. We have a total of 38 different companies in the aerospace and defense sector. Now, like I said, this ETF for me is a go because the aerospace industry just keeps growing and growing and growing. It has had explosive growth, especially I would say over the last couple of years, because China is now increasing their military might. China is spending a lot on, and I did a video about this before. You guys can go through my videos and you'll see it, but I'll also leave a link in the description for that. They're spending a lot of money right now on defense, and as a result of that, the USA is spending a lot to try and keep up. Since Trump took over, the budget for defense has been increased, and I just see the stock going up and up and up. So this ETF for me is a buy. All right, so the next 2 ETFs are pretty much going to be added into the portfolio for stability. So the first one is the Vanguard Long-Term Bond ETF. And if you guys don't know this, but bonds traditionally outperform the market whenever there is any kind of recession. So it's always good to have some amount of bonds and commodities too inside your portfolio. So today we're going to take a look at the Vanguard long-term bond ETF. The current price is $102.13. Over the past 5 years, it is up 9.95%. If we go ahead and scroll down here to take a look at my investment in this bond, my current equity is $510.65. My total cost is $501.07. For total return, I am up 1.91% or $9.58. My average cost is $100.21. I currently own 5 shares. In terms of my portfolio, it represents 1.54%. All right, so if we scroll down here some more to get some more information about this ETF, it says here the BLV tracks a market-weighted index of investment-grade U.S. government and / corporate bonds, as well as international dollar-denominated bonds with maturities of at least 10 years. The market cap right now is $4.47 billion. The 52-week high is 106.07, so it's below the 52-week high. And when we scroll on down here, I wanted to show you guys something else. It actually pays a dividend, and the dividend is paid monthly. And as you can see, the last dividend payment I received was on November 6th for a total of $1.41 or 28 cents per share. So this is going to add some nice stability to your portfolio. Doesn't really grow that much, like I said, but it does pay a dividend and it is stable. You're looking at roughly about 10% growth over 5 years. So I would recommend that you allocate a portion of your portfolio, like I said, to bonds as well as to some kind of commodity, preferably gold. If we hop on over to the website for this ETF, which is the Vanguard website, because the ETF is owned by Vanguard, it gives you some basic information as far as the overview right here. So pretty much that's what you're exposed to. You're exposed to the US bond market. It has government bonds, but it also has corporate bonds as well. And it also has some international holdings in there as well. The expense ratio for this is very low. It's 0.07%. As far as risk, between 1 and 5 obviously being the highest, the risk level is roughly about a 3. So it's, it's in the middle. This, I would compare it to the other bond ETF I own, which is LQD, which is an ETF by iShares. It's a little bit higher in terms of price. It's roughly like about $100, and I would say like about $120 or somewhere around there, whereas this is only $102. So it does have a higher bar to entry, but that one specifically covers mainly corporate bonds. But BLV is good. Like I said, it's stable. It's going to add a lot of stability to your portfolio. It pays a monthly dividend, so that's good right there. And the fee is low. So for me, this is also a buy. All right, so the next and final ETF is going to be a commodity. And in this case, the commodity is gold. But before we go ahead and look into that, I want to go ahead and hop on over to Robinhood. I want to show you the performance of my stocks over Black Friday. Pretty much over Black Friday, almost everything here was in the red, as you could see. And I'm sure it's the same with your portfolio. But when you take a look at gold, IAU, it is actually up. It is actually up 0.05%, while everything else was down. And that's pretty much a characteristic of gold. Gold has a tendency to do extremely well whenever there is, a recession, or even if there is just like, that impending fear of a recession. And if you go through YouTube, you'll see a lot of videos, people talking about the 2020 recession is impending. And the logic behind that is typically the market tends to pull back every 10 years. And the last big recession was, I would say, 2008. So now everyone is speculating that the market's gonna, it's gonna have a recession. Nobody knows for sure when a recession is gonna happen, But I could tell you this, gold has always been a time-tested investment that you can't go wrong in. So I opted to have a portion of my portfolio in gold. All right, so the ETF we're looking at today is an iShares Gold Trust ETF. iShares, as you know, is owned by BlackRock. The current price is $13.98 per share. It is up today, meaning the last day of the market. And over the 5-year period, it is actually up 21.99% over 5 years. So that's pretty decent growth for gold. If we scroll down here to get some more information, it shows here that my equity is $97.86. My total cost is $98.06. So it's actually down 20 cents right now, or 0.20%. My average cost is $14.01, and I have 7 shares. It represents 0.30 of my portfolio. If we scroll down here, it just gives you some basic information about the ETF. It says IAU tracks the gold spot price, less expenses and liabilities, using gold bars held in vaults around the world. So that's pretty much what you are investing in. You're investing in gold bars that are held in vaults all over the world. The market cap for this ETF is $16.76 billion. The 52-week high is $14.90, and the 52-week low is $11.78. We can go ahead now and hop on over to the iShares website so we could get some basic information on it. Ticker is IAU. The current price $13.96. The fees associated with this ETF is 0.25%, which is good. When you compare it to, say, the other gold ETF, which is the ticker is GLD, and that's a SPDR ETF, but that's a much larger ETF. That ETF has a 41 billion market cap, but the actual fee for that one is 0.40, so it's significantly more in terms of fee, but also the price is higher on that as well. The price per share on that is $137.86. Whereas the price on this one is $13.96. So the GLD ETF for gold has a much higher bar to entry. And that's pretty much it, guys. You know, I'll leave links in the description for all the different ETFs that we talk about, so you can actually go over and look at the prospectus, you can look at the holdings, and you can look at the fees and get the general information. And all that information will be listed in the description below. So that's it for the video today, guys. Thank you so much for watching. If you enjoyed this video, please go ahead and smash that like button. And if you like videos like this, go ahead and subscribe. I make new videos every week. Thanks again for watching, and y'all have a great day.